Alright guys, check this out. This is the price of gold. And for 10 freaking years, it stayed between this range while most other assets were rocketing. But now, for the past 2 years, it's pretty much gone parabolic, becoming one of the best performing assets on planet Earth. And folks, this is gold we're talking about. One of the oldest and largest assets by market cap, which makes this move even crazier. But anyways, needless to say, this brings up a huge question that we gotta discuss. And that's, should we be buying actual gold? Or should we be sticking to our usual plan and buy Bitcoin, aka digital gold? Well, in this video, we're going to explore both sides, the case for gold and the case for Bitcoin. So be sure to watch until the end before you decide what to do for your own portfolio. Alright, let's start with the case for gold, aka the OG store of value. Now, gold's price rocketing is one thing, but perhaps an even bigger deal is that it has officially broken out of a massive 35-year downtrend. You see, even though gold's nominal price has gone up over the years, it hasn't really kept up with all the dollars being printed. So when you plot gold's price versus the total money supply, it looks something like this. See how every time gold tries to outpace the money printing, it gets rejected hard? Well, recently, it smashed through this long-term declining trend line, which tells us that things could really be different for gold this time around. In fact, this is such a big deal that Wall Street has taken notice, with Goldman Sachs raising their target to $3,700 an ounce by the end of 2025. They even noted that it could hit $4,500 if things get really crazy with Trump's trade war. So that's quite the massive jump. Like, it's about 35% higher than its current price, which is absolutely wild if you think about it, because this is a $20 trillion asset we're talking about, not some random shitcoin. But anyways, it's not just the money supply ratio that's bullish here. You see, gold recently broke out of a huge 50-year rising wedge chart pattern, and its monthly RSI surged above 70 for the first time in 14 years. Historically, when gold's RSI hits these levels, it tends to mark the beginning of some long-term rallies. So, point is, on the technical analysis front, there's plenty to be bullish about for gold. But now let's zoom out a bit and talk about the macro picture, because this is another area where gold shines. You see, central banks have been buying gold like crazy, especially since the Russia-Ukraine war started and the US froze Russia's dollar assets. This made a bunch of countries realize that that could happen to them too. So they looked for a neutral asset not tied to the US dollar to hold some of their reserves. Some of the countries buying gold the most aggressively are China, Russia, India, and Turkey. For example, China officially reports their reserves at around 2,300 tons, but analysts suspect their actual holdings might be over 5,000 tons. And this central bank buying has been so intense that 2022 and 2023 were close to record-breaking years, which makes me think that this momentum will continue. Now, one important point to note here is that none of these countries have shown much interest in Bitcoin as a reserve asset. I mean, sure, Russia has dabbled with Bitcoin briefly, but it's nothing serious compared to their gold purchases. Meanwhile, China and India have shown little to no interest in adopting Bitcoin for their reserves. So, point is, gold could continue to get massive inflows from some of the most populous countries on Earth, whereas Bitcoin gets none of that. Anyhow, another thing to consider is that gold has a legendary track record as an inflation hedge. You see, when inflation goes up, things like cash or bonds typically go down. But historically, gold has held up strong or even surged during inflationary periods, such as the 70s and 80s. Also, unlike Bitcoin, you don't have to worry about any technological threats, such as quantum computing, mining profitability, or network security. Gold is a physical asset, so once you have it, it's yours, and there's not much else to worry about. But anyhow, another interesting point here is that Bitcoin has actually failed as a safe haven asset during the recent tariff scare. According to JP Morgan, Bitcoin did not attract significant flows during the recent market volatility. Instead, investors stuck with traditional assets such as gold, the Swiss franc, or even the yen. So yeah, this definitely gives gold the edge if you're looking for safety and stability. Now, speaking of stability, gold's volatility is quite low compared to Bitcoin. You see, during major market crashes, gold usually holds steady or even gains value. The biggest drawdown gold has had in recent decades was around 20%, while Bitcoin has had as massive 80 to 90% crashes. So if we're talking from a risk-adjusted basis, gold beats Bitcoin in recent years, meaning that it gives you a smoother ride with less volatility for the returns it provides. Anyhow, if you've watched our channel before, then you know that we like to look at both sides of an argument before making up our minds. So next up, we gotta look at the case for Bitcoin instead. But before we get there, I want to share with you something super interesting that I came across recently. So you've probably heard about OpenAI, the company behind ChatGPT, right? Well, they are rumored to be launching their own social media platform to compete with X and Meta. But here's the juicy part. There's speculation that their platform might integrate WorldCoin. You see, AI-generated content is already flooding the internet, making it tough to know what's real and what's fake. Our feeds are already full of cloned voices, fake images, and synthetic outrage. And that's exactly why WorldCoin matters. WorldCoin uses something called World ID to verify real human identities. So just imagine a social network that confirms that any given message is from an actual human being, not some AI bot. Well, that's the type of integration that we might see with OpenAI's new platform. And with Sam Altman behind both OpenAI and WorldCoin, he might be setting the stage for something huge. A social platform where humans, not bots, truly connect. Anyhow, if any of this sounds intriguing to you, then you can just check them out by downloading the WorldCoin app, checking out World ID, and seeing what else they're cooking by using my links below. Alright, back to the case for Bitcoin. And here's the thing. Yes, Bitcoin is relatively new, but it's almost unbeatable when it comes to potential returns. You see, one big advantage for Bitcoin is its smaller market cap, currently sitting at around 2 trillion, whereas gold has a massive $20 trillion market cap, roughly speaking. So because it is smaller, Bitcoin has more room to grow and could even catch up to gold one day if money really starts to flood in. Now, another bullish point for Bitcoin is its institutional adoption. You see, we got major institutions, sovereign wealth funds, and huge asset managers all piling into Bitcoin recently. For example, the Abu Dhabi Sovereign Wealth Fund recently disclosed Bitcoin exposure worth hundreds of millions of dollars. BlackRock, the world's largest asset manager, recommends a 1 to 2% Bitcoin allocation for portfolios, and Bitcoin ETFs have attracted billions in institutional flows, quickly surpassing gold ETFs in assets under management. These aren't small-time players, by the way. They're institutions managing trillions of dollars, which is bullish for Bitcoin any way you slice it. Also, an interesting point to consider is that some analysts think that gold's recent rally could actually be close to its peak. You see, historically, big bull runs in gold have ended with sharp corrections, like the 26% drop in 2008 or the 46% drop from 2011 to 2015. Also, the general market sentiment for gold right now is honestly quite euphoric, which usually means that we're close to a top. So yeah, if gold is about to cool off for a bit, then that would potentially make Bitcoin more attractive if it's about to go on its own run. Now, on a fundamental level, Bitcoin does offer some things that gold does not. For example, Bitcoin has unmatched financial sovereignty and censorship resistance. Bitcoin cannot easily be censored or seized by the governments, and it's incredibly easy to move around the globe. Like, you can send Bitcoin to someone around the world with low fees, or you can even bring millions of dollars worth with you on a small USB drive. Try bringing that amount of gold with you in a suitcase. You'd probably get taxed out of the wazoo for that, or even get it seized altogether. But anyhow, another massive advantage for Bitcoin is its built-in scarcity. You see, there will only ever be 21 million Bitcoin out there, which means that if every millionaire in the world wanted to own a single Bitcoin, it wouldn't be possible. And that's the power of its scarcity. Furthermore, Bitcoin's current inflation rate is just 0.83%, which is lower than gold's 1 to 1.5%. So with central banks potentially restarting their money printing in the future, Bitcoin's scarcity could be its biggest advantage. Finally, Bitcoin consistently crushes crushes it during market recoveries, historically giving us returns of around 190% in the years following major market crashes, destroying gold's modest 8% returns in those same periods. So if you're looking to capitalize on rebounds, then Bitcoin's a no-brainer. Well, there you have it, the strongest case I could make for both gold and Bitcoin. And honestly, you could just get a bit of both, right? But if that's too much of a cop-out for you, then here's my more opinionated answer. Personally, I think gold is better in the short term. While there's this trade war uncertainty and potentially reshuffling of the world economic order going on. But if and when that subsides, and if the Fed starts cutting rates and starting up their money printer again, then I'm definitely on team Bitcoin. Not to mention that so many big institutions are getting into Bitcoin, and also the Trump family has a lot of their wealth riding on it. So those factors tip the scale in favor of Bitcoin in my eyes. I want to know what you guys think though. Please let me know in the comments below. Also, if you want to know why smart money was buying Bitcoin during this recent crash, well, I bet most of y'all were panic selling, then just watch this video by my co-host Daniel.